about AI and how incredibly interesting it's becoming, how advanced it's becoming. How are you seeing it impact how the lending side of real estate are doing things like?
Unbelievable stuff that's happening, and it will continue to happen, I imagine. So there are some lenders, there's some banks out there that are underwriting files using 100% AI. What I mean by that is if you bank with if you bank with whoever, um,
Do you know the lenders that are using those? Can you say?
I cannot say.
Okay.
Uh,
Is it one of the big five?
yeah, yeah.
More than one of the big five?
Right now, I believe it's just one, and it's probably just like a test period of it, and we'll see what happens with it.
Weren't they already doing that though?
Kind of, but not to this scale. So
Ah,
what's happening now is like letter of employments, pay stubs, not even needed anymore. Do you want to know why? Because as long as the computer can read that your bank account every 2 weeks is getting X number of dollars, they'll use that. You're qualified, good to go. If you bank fully with one lender, or yeah, all your banking with one bank, do you need down payment documents? Nope. It's they can read it in 2 seconds. Hey, you have the funds. Fantastic. Um,
what is your opinion on that? On not needing letters of employment and things like that? I mean, isn't that what brought on 2008?
yeah, and I think there are a lot of you know creative slash fraudulent people that you can probably play with this stuff for a little bit.
Welcome to Supply and Demand with Adam Nadler. This is a podcast dedicated to the real estate market in Canada, available now on YouTube, Apple Music, and Spotify. Jeff Mudrick, thanks so much for coming back on again. Appreciate your time as always. What is going on with the market? Let's start, I guess, first with just what do you expect us to see from the Bank of Canada? I think the next announcement is June 7th.
It is, yeah. So I think the latest numbers that have come out, inflation is on the decline still. I think the expectation around in the mortgage industry is that they're going to hold rates for the next little bit. And eventually, probably come 2024, they might start decreasing. They're kind of at a standstill right now.
Are you trying to say we're not going to see any more increases for this year?
We'll see, but if I'm one to guess, with where inflation is right now, you might not see it in the grocery stores where prices are expensive, but where what the Bank of Canada sees that inflation is on the decline. So I think it's safe to assume we're not going to see another increase of the Bank of Canada overnight interest rate for the rest of this year.
And that's really good because that's going to actually save me some money and get me a new subscriber on my YouTube channel. Because on one of my last videos, I actually posted in the comment section, "Hey, do you think it's going to go up for the rest of the year?" Because in my comments in my video, I said that I didn't think that it was, and someone commented and said, "Yeah, it's gonna keep going up, and the inflation numbers are all wrong, and this and this and that." And so I actually made him a bet in the comments section and said, "Listen, I'll make you a bet." Because I saw that he wasn't a subscriber yet, and I said, "I'll make you a bet. If by September, if we haven't hit the 5% mark yet, because we're at 4.5 right now, then you subscribe to my channel. And if we're at 5% or above, then I'll send you a $50 Amazon gift card."
That's a good deal. Win-win for him. He's going to either educate it or get some money. It's a win.
Yeah, exactly. So, what exactly is the communication from the Bank of Canada as to inflation? Because they said that they expect inflation to come down around 3% by the summertime. Do you
Yep.
think that's the case?
Do I probably not, but I think as long as it's continuing down in that downward trend, they're happy. They're doing in their minds, they're doing what they can do, which has been increased interest rates for 12 consecutive months. So, whether or not whether or not inflation goes all the way down to the 3% mark or continues on that downward trend, I do think that they're happy. Tiff Macklin's happy, and I don't think that they're going to continue to increase in the foreseeable future. Like the talk about the mortgage industry, or the way I like to think of it is kind of like this. Um, the way that banks and lenders price mortgage interest rates is based on a prediction, where they're predicting that rates are going to go, where rates are currently. So when I'm seeing that 5-year fixed rates are priced at a significant reduction than a 4-year fix, a 3-year fix, a 2-year, 1-year fix, that tells me that banks and lenders are assuming that fixed interest rates are going to drop over the next couple of years because they would love clients in a 5-year fixed term at 5.5% or 5%. They will have clients in a 5-year fixed term at rates today like 4.8% because if fixed rates drop to 3.5 or 4%, look at that spread that they're getting. Whereas right now, 3-year fixed rates, 2-year fixed rates are kind of sitting around like 5.1, 5.2, 5.3, kind of in that middle ground. So I don't think that they're expecting those rates to drop as much in that short period of a time. But with a variable rate, they're pricing them like relatively aggressively. So I think that lenders wouldn't mind clients in that variable rate, but it's not like their preferred rate, I guess, or preferred product for clients to be in right now.
Talk to me about TD for a second, because last time you were here, you were really saying, hey, look, TD's got some great deals right now. Have your clients been coming to you a little bit worried about what's going on with TD Bank in the news? Or is
Not
that is,
really.
is that just down south?
Yeah, are you talking like TD is the most shorted bank
Yes,
in, I think, either in the world or in North America?
but not TD Canada Trust,
TD Bank.
TD Bank.
TD Bank is the most shorted bank in the world. However, like, why do people short a bank? First off, it's mostly people in the States that are shorting a bank in Canada. So, why are they shorting? It's TD's invested a lot in, I believe it is JP Morgan Chase, I believe, and something's going on with them. So that's
Well,
why.
aren't didn't they just buy up First Republic? So aren't
Maybe
they in
it's
good
not
shape?
JP. It's TD has a lot of American assets invested into a bank in the States. I'll get back to you on who it is. It's a big name bank, but anyways, and that the bank's not doing like phenomenal. So the assumption is that, oh, like the American people shorters are saying, well, if it's not doing well and TD has a lot invested there, then TD is obviously not going to do well. However, with the Canadian banking system the way it is, it's very unlikely that anything really happens to a big five or big six bank in Canada.
So what happens if TD Bank starts having real trouble or goes down? How does that affect TD Canada Trust?
Honestly, it probably won't. Like TD is so aggressive. Maybe their interest rates increase a little bit, but right now they are like the bottom of like they're the best, most aggressively priced lender today on May, whatever day it is. So maybe the rates come up a little bit, but they're so much lower than the competition right now that even if their rates get a little bit less beneficial to clients, they're still going to be a great option for most people.
So what you're saying is the banks are looking at the market in a very optimistic way right now.
Yeah, most banks, like there are different like balance sheet lenders versus non-balance sheet lenders, like
Can you explain that? What does that mean?
just the way that their assets and their liabilities are calculated. So, for example, like a big red bank is, they will only lend a certain amount of their clients' money versus their own investors' money. So, if it's, whatever the number is, but they can't go past X. Like if they have $1 billion to invest, maybe they can do like 10 or 20 or 30 times that, whatever that number is. Whereas like a TD has the ability to stretch that out even more. So this is why, like with Scotia or Big Red Bank, their pricing is really not aggressive right now because they want to make the biggest margins. If they're going to lend money out in a mortgage, they want to make a big spread to kind of satisfy the back end numbers for the bank. Whereas other lenders don't need as big of a spread. So like Scotia right now, let's say they want like a 100 basis point spread on a mortgage. So if they're buying money at 4.5%, they're going to charge a consumer 5.5% on a mortgage, just for like very simple numbers. Whereas TD, if they're buying it at 4.5%, they're lending it out at 4.7%. So like a 20 basis point spread.
Can you explain a little bit about how that works? And I know this is a little bit more of like a macro or meta kind of view on things, but a lot of people don't know how banks actually create money from thin air through lending. When you're saying they're buying money, what does that mean?
there are ways that they're using like our money to create wealth or to create, you know, to invest. And then they have their own investors' money. Um, they have their own funds that they're able to invest. And like I said, if they have a like a value of, let's say, $1 billion, they can exceed that. They can invest up to, 20, 30 times that, and whatever that number is for certain banks or lenders. But they have the ability to kind of stretch that money.
Right, by creating private debt.
That's exactly it.
Okay,
Yeah.
interesting. So right now everyone's having an optimistic outlook on the economy, and although most people are certainly not feeling this way, and I know technically we're not in a recession, but everyone certainly feels like we are, and maybe that's just a little bit of political theater on that front. How are you seeing banks underwriting clients differently based on the situation? Like, they must be looking at people a lot more conservatively than they used to.
100%. So I found it interesting. A year or last December 2021, you were saying, Jeff, inflation is a lot higher than what is being reported. And a few months later, get it? What did we hear? Inflation's through the roof. So you saying what you just said now, I fully agree with you in that. Like, are we in a recession? I don't know. But regardless,
We are. Like, look, we are.
yeah.
Let's call a spade a spade. I'm not scared to put this out on YouTube. We're definitely in a recession. I don't know what political theater is happening around that word recession, but I know everybody's feeling it.
Yeah, so like from an underwriting side of things, when we're submitting deals to lenders, there are always exceptions that can be done. So with certain lenders, there are some set ratios that you can look up on Google and find out what those ratios are to buy a house. And there are some lenders who will extend that ratio if the deal fits. Um, those extended ratios are being pulled back a little, many, many more questions being asked. And even things like on the alternative lending side, very standard for years and years and years. You can qualify on, if you have a business, for example, 6 months of business bank statements. Whereas now almost every alternative lender in the world doesn't want 6 months, they want at least a year, which doesn't sound like a huge change, but it really is. Um, to they're essentially doubling the amount of time that they want to see to make sure the business is viable, the business has good income for a full period of time. They don't want to see 1 month of no income and then one big month of income. Like they're a lot more strict on that. And again, when we talk about extended ratios, those are also just they're not happening. We're not seeing those approvals. So when you're getting a pre-approval and when you're getting a mortgage, you have to make sure that your mortgage broker or whoever you're working with is on the ball and you really know down to the penny what you can afford. Because there are some situations, unfortunately, where clients are being told one thing that, oh, we'll get it based on this exception, but that exception no longer exists. And it's a very scary time.
Now, in terms of the other side of underwriting deals, it's not just the client, but it's also the property. And this is where appraisals come into I guess, the arena. And I was really kind of questioning the whole industry in a sense last time we spoke on the last podcast. Now that things are moving up, and just, the numbers just came out today, so I actually put it here on a sheet so we can actually even take a look at it. And I'm wondering, you know, how are these numbers going to affect how appraisals are now viewed and how appraisers are now viewing properties? So right now, sales are down year over year by 5.2%. So we have 5% less sales than we did in April of 2022, which was like the peak of the market. So not an enormous
Mhm.
change. But the crazy part is, and this is how quickly the market is starting to bounce back in terms of activity, we have a 27% increase in sales month over month,
Unbelievable.
which is
Yeah.
it's enormous. Now, in terms of price, we're down only 7.8% year over year. This is across the entire Toronto real estate board, right? From the peak of the market a year later, we're down 7.8%. Month over month, though, we're up 2.4%. 2.4% in real estate in 1 month is a huge increase. Now, the crazy part is that even though we had such low inventory and such a massive amount of demand and sales happening last year, which was driving prices absolutely wild at the peak of the market, we have 38% less new listings coming to the market this year in this month than we did a year ago at the peak of the market. So even when inventory was super low, we have 38% less new listings, which means that the sales to new listings ratio, like if we were to look at how many sales are happening versus how many new listings are coming onto the market, the sales to new listings ratio is up 23% year over year, which basically what that means is that we are selling real estate faster than it's coming onto the market by a wide margin. Like we're running out of real estate very quickly.
And the impact, as I'm sure, as I know you know, is that especially in Toronto or most of the GTA right now, the bidding wars are back. Multiple offers are back. We're seeing this high. We spoke about this on the last chat as well, but we're seeing 10, 20, 30 offers on properties again, and only one person gets it. So 29 other people are looking for houses in that same area. So it is challenging when there's those numbers are staggering, like 30%, whatever, 30% less listings now. Like that's unbelievable. Yeah, like I like how you put it. We're selling real estate faster than new listings are coming, which is a big demand right now, and there's a big demand for properties.
Yeah, and it also, sorry, go ahead,
No,
continue.
I was gonna touch on appraisals. You brought it up, and I
Yes.
think it's such a. I know when we spoke last time, we had chatted around, what is going to happen with appraisals? Are the appraisal companies changing? Because this was or even today. So I'll give you a quick example. We had a property that appraised short, came in short. This was in April, so like 2 weeks ago. However, when you get an appraisal report, we don't just see a value of a home. It's the value of a home compared to recently sold properties or properties that may be on the market or properties that have sold that maybe haven't closed yet, a whole host of different factors. So this was in April. Not many properties have sold between February and April. So this appraiser used 3 properties that sold in February as the comparables. February market compared to a mid-April market, very, very different. So the appraisal came in like 50 grand short. So we had to come up with a reason why um, we don't believe that this appraiser was accurate. We file like a little like price conflict thing. And the appraisal company agreed with us that property values have dramatically increased, at least, you said 2.5% month over month. Right there is like a $1 million property. It's 25 grand. So if our appraisal come in 50 grand short, even that makes up the price. And I'm sure the, March to February also increased in price. So we filed a little complaint. Within a day, they agreed that our points were accurate. We gave a whole host of data, but our points were accurate, and the appraisal came in at what we wanted it to. So remember, it's not just the actual number you see, but it's making sure that the person who's getting the appraisal can read it accurately, see if it's like if it's right or not, and be able to fight for what actually makes sense in today's market.
Which doesn't, yeah, and that's an insane concept to me to look at the winter, the dead of winter, in
The
one
slowest February in how long, probably?
in 40 years.
Exactly.
In 40 years.
You know that answer. 40, yeah.
Yeah, that this past winter was the slowest real estate winter in 40 years, right? And that's including the fact that we have more consumers in the market
Yeah.
now than we did 40 years ago. So it's a huge it's a huge comparison to make, even though it's only 3 months apart.
But that's why, right? Like when there's so many buyers, like I get calls all the time from a lot of clients and some realtors and some, other even like selling realtors who will say, "Hey, like, what do you think this property will, what do you think this property would appraise for?" It doesn't matter what it would sell for because everyone knows now it's probably going to sell for more than maybe what it's worth. But a lot of people are really worried about what it will actually appraise for. Um, and it's very challenging to run the numbers because there haven't been many sales recently. So we're in like a very interesting time, as we were a year ago, as we were 2 years ago, kind of during COVID, where there's not a ton of sales. And how are we determining the value of properties? And we can talk to, there's a lot of people with different viewpoints on appraisals and how accurate they actually are, and if they're uh, incorporating like just that time, or if it's 2 months ago, or are they predicting 2 months ahead, like what the heck's going on. So what we're finding is a lot of alternative lenders and private lenders, they don't care what the property value is today. They want to know what the property value is within 30 days of closing. So if you have a 3 month closing, they don't even want the appraisal right now. They won't take it. They want it 30 days before closing, which kind of makes sense to me.
It makes sense. It also puts that buyer at risk.
100%. Not great for the buyer, but if I'm lending $1 million or $2 million privately or whoever, that's the number I want. I want to know what it's worth at closing. I don't care what you bought it for 4 months ago.
Right.
But
But
100% very risky to buyers.
yeah, because if I go ahead and I, put an offer to buy on a place, I'm not going to have a financing condition for 2 months. I'm going to have one for 5 days.
Yep. And
And
so like last year, it hurt a lot of people because if you bought in April or May and didn't close till July, property values dipped quite a bit between those few months span. So I'm sure a lot of people were put in a very challenging spot.
but now the property values have increased and I mean, frankly, from what I'm seeing with these numbers, they're essentially we're seeing them spike.
Yeah.
Because even now, I mean, the springtime, and mind you, we haven't had any seasonal market in about 4 years, right? Because we've had just COVID. We've had a major downturn in the market. Now we're having a recovery that's like slingshotting back in the other direction, apparently. I mean, it's just all over the place. In the spring, we would normally see more inventory. This is the time when people list. It's May,
Yeah.
right? And we're just seeing nothing.
And just to give anyone context, like it's the exact same in Vancouver. Calgary's absolutely booming in terms of pricing. Vancouver is always pretty pricey, but it's similar to Toronto. It's rebounded. Calgary, unbelievable pricing right now. Like it's all bidding wars, a lot of buyers in the market. So these three, the three cities, Toronto, Calgary, Vancouver, we're all seeing the same thing. And even places like, if you bought in outside the GTA, Kitchener-Waterloo, Stouffville, Uxbridge, like Sharon, prices dropped pretty dramatically for about 8 months.
100%. And Hamilton got hit hard.
Hamilton, yeah, and a lot of these places though are probably, I think they're just under where they were a year ago. So they've rebounded, which is great for anyone who bought, and for anyone who purchased for anyone who's waiting to purchase. We're kind of back to that pricing.
A couple more things I did want to ask you about because it's becoming so much more prevalent, and we were just talking about this off air um, about AI and how incredibly interesting it's becoming, how advanced it's becoming. How are you seeing it impact how the lending side of real estate are doing things? Like, how is that?
Unbelievable stuff that's happening, and it will continue to happen, I imagine. So there are some lenders, or there's some banks out there that are underwriting files using 100% AI. What I mean by that is if you bank with whoever, um,
Do you know the lenders that are using those? Can you say?
I cannot say.
Okay. Is it one of the big five?
Yeah, yeah.
More than one of the big five?
Right now, I believe it's just one, and it's probably just like a test period of it, and we'll see what happens with it. And I think it actually will come to the broker side as well, um, or eventually in its own capacity.
Weren't they already doing that though?
Kind of, but not to this scale. So
Ah,
what's happening now is like letter of employments, pay stubs, not even needed anymore. You want to know why? Because as long as the computer can read that your bank account every 2 weeks is getting X number of dollars, they'll use that. You're qualified, good to go. If you bank fully with one lender, or yeah, all your banking with one bank, do you need down payment documents? Nope. They can read it in 2 seconds. Hey, you have the funds. Fantastic.
what if you have with one bank? I mean, like for me, for example, I bank with TD, but I'm personally professionally incorporated, and I am also personally with TD.
So it's more so for like those like kind of cut and dry clients right now. I think it will move more so towards like the more complicated files. But for those people that get,
I'm asking selfishly.
yeah, I know.
Sorry, everyone. Yeah.
Those people who kind of get that regular paycheck, those salaried employees, it's gonna make life a lot easier. For people who are incorporated, I'm sure there will be something that will speed up the process a little bit. For now, I don't think they're there yet. Um,
What is your opinion on that? On not needing letters of employment and things like that? I mean, isn't that what brought on 2008?
yeah, and I think there are a lot of you know creative slash fraudulent people that you can probably play with this stuff for a little bit. But if you have smart technology, there are ways to kind of figure out whether or not it's fraud and how, if you're in the same or if you have the same deposit every other Friday for 6 years, the chances of you continuing in that field is probably pretty high. Do you need T4s anymore to prove stuff? No, because again, you can just read the bank statements. It's a very, you know, interesting time, and we'll see how this goes. Like, is this going to lead to is it going to lead to more problems for banks? Maybe in the short term, but probably in the long term. Like, it's going to be the way of the future, in my opinion. And the reason why banks like to promote this is because they want all your stuff. If you're with TD, they want all your stuff with TD. Get your home insurance there, get your life insurance there, get your checking, savings, TFSA, RSP, mortgage, get everything there. Then they'll make your life a lot easier.
Ah,
Your brain's going now, isn't
no,
it?
I just I hate that idea. I hate that idea of the incentive to centralize all of your banking into one spot. I don't think that it's good for the consumer. I think that it we need to have a lot of competition. We already have an extremely centralized banking system in Canada as it is. And so I'm not in love with that idea. And especially when they're like selling you, for example, I remember when I got my mortgage and TD offered me um, the mortgage insurance.
Yeah, yeah.
And I was like, and I didn't know what it was. And then so I called up my, insurance A team that I have and I asked them about it. And they said, that policy is dreck. It's garbage.
Yeah.
Don't buy that, right? It's a reductive policy. It's over time, its value to you
It's a
decreases.
declining balance insurance policy. It
Yes,
just
it's a horrible thing. And how they pitched it to me was, well, should you ever get sick one day, your mortgage will be wiped out.
That's probably what life or disability insurance is for. But
That's
you
right.
can get it. Do you want like the big kicker is you're probably automatically. It's kind of go back to the automatically approved for it, and you're going to pay for it because it's a lot more expensive than if you were to go all of these. So I'm not saying just TD. Every lender will have their own insurance policy that you're pretty much automatically approved for. You answer, do you smoke? Any pre-existing health conditions? If you answer no, no, automatically approved. Um, but you pay for it in the premiums. Whereas if you go through the standard kind of an insurance agent or life insurance, disability insurance, might be some underwriting involved in that, might be some tests involved, but it's going to be probably half the price as what you'd pay at any of the any lender that offers their own insurance.
So this is the whole world of uh,
Convenience.
right.
Anyways, yeah,
Convenience for who though? It's convenience for the bank, not for us.
yeah.
That's so interesting. Okay, so the world of banking and AI moving in a direction that's questionable at this point in time. Who knows? It could be a great thing. And to be honest, I know I'm picking on TD. I bank with TD. I actually love TD.
You
They've
know,
treated me really well as a customer over the years, but
huge portfolio of my business is with TD. I love them as well.
I'm still, that doesn't mean that just because they've done well for me up to this date that I'm not going to question them at every single turn in that road.
Like you would any other bank.
Exactly.
Yeah.
Exactly. I am a diligent consumer. That's why I actually like having you on here because you're also dealing with all of the different lending institutions out there. And so right now, given the climate of the market, which everyone seems to be shrugging their shoulders, and in actual fact, inflation is is a ratioed measure of something. So it's not just prices going up, that's a misconception. inflation is the ratio of money supply relative to unit of production within an economy. So the more productive we are, the more we're able to increase the money supply. But if we increase the money supply way beyond the measure of production that our economy is actually producing, then we get inflation. And so right now, what you're saying is banks are very critical of unit of production. They're wanting to see that a business or an individual is consistently producing what they need to be producing in order for them to be underwritten for a deal.
Yeah, like I think the big misconception is that if a client or if clients default on a mortgage, the bank's going to make a ton of money. It's not the case at all. It costs the bank. Like if a client can't pay their mortgage, the banks don't want that. Nobody wants that. So like I know you've done a few of these types of deals where client or banks lenders take possession of a property and you have to sell it.
Yeah, I got one coming up.
Yeah, and maybe they're good for the person buying it, but for the person who's losing the property, not good. It costs the bank a lot of money, and so no one wants that, which is why they are being extra diligent in ensuring that like pretty much all T's are crossed and I's are dotted.
So I guess for all of the viewers out there, the takeaway is when a deal for purchasing real estate is being underwritten, there are two sides of it. You're underwriting the person buying it, as well as the property that they're buying to make sure that the property that they're buying, if it's appraised at what the bank agrees is its value versus what they purchased it at, and for the person, they're underwriting the person's income, their ability to be able to pay the mortgage. Now, what you're essentially saying is that banks are much less concerned with the value of the property that people are purchasing, and they're much more concerned with the human element, which is more likely to be at fault.
100%. So the way I like to explain it to clients who don't know if they qualify with an A lender, an alternative or B lender, or a private lender is with an A lender, um, the lender is going to look probably 80% of the person, or let's say 90% of the person, 10% of the property.
That much, eh?
With a B lender, you're going to look probably 60% of the person, 40% of the property. And with a private lender, 10 to 20% of the person, and 80 to 90% it's about the property.
And what ratio would you say of the marketplace that you see is of those each, lenders
So
lending out?
my clients, I'll be referred to kind of all three clients. The clients I work with most, like my biggest pool are A clients or clients who um, qualify under A lender guidelines. And that's because in each of these pools in the A, B, and private world, there are 50 lenders in each. So, to try to say I have knowledge of 150 different lenders, no one can do that. Maybe AI. AI can do that. So the majority of clients I deal with are over here. Over the course of the past year, a lot of other brokers like myself have transitioned to doing a lot of these B deals because there's a lot more of them out there now, like a lot more. A lot of brokers in this B area who were over here said, I will never do a B deal. Have said, talk to me about these B lenders. Calling up their B lenders. Talk to me about this policy because there's so much business here now. And even over here, there's still a ton of business for the right people on the private side of things. So, I think for my personal business, I'm still 95%, 5%, 0%. But for the average broker, I think it's a lot more leaning towards like the B or alternative world now.
And that's pretty normal for a downswinging market.
Yeah,
When
100%.
when interest rates go up, it's harder to get a mortgage, and then people move to a little bit more of a risky lender.
Yeah, and like you know what, these B lenders aren't like a terrible lender. They're just out there a bit more expensive, and that's because instead of qualifying on standard letter of employment and pay stub, for example, they're looking at 12 months of bank statements. So it's a bit more time involved. It's a bit more work for the broker. Sometimes brokers charge a fee in the B or private world. And the lender charges a fee, so it's a bit more expensive, but for the right person, it's still a great option.
One more question I wanted to ask you, and the reason why I like asking you about what's up and coming is because as a mortgage broker who's deeply entrenched into the world of financing, you usually do have a bit of a heads up as to where things are happening and how your industry in particular is going to be pivoting to adjust and adapt to new financial instruments coming down the chute. One thing I wanted to ask you about, there is now talk of a CBDC being developed. And in fact, it's on the Bank of Canada's website, a central bank digital currency.
Okay, yeah.
And how do you think that is going to be affecting the lending world when it comes to what you do?
It's a good question. I am not familiar with it. I imagine you're gonna guess I'm going out on a limb here and saying, do you like this policy? Or
No,
yeah, I had a
no,
strong feeling about that.
no, I hate it. I hate it. I am a freedom maximalist. I don't like the idea of the ultimate surveillance tool being used on everybody, and cash is now,
Mhm.
outlawed, and there's no such thing as any degree of privacy with your money whatsoever. That's crazy to me.
Well, I think it's probably gonna, from like a lending side or a finance side, like it's kind of what is going on right now with some of these AI tools that lenders are using to qualify clients, where like there's no privacy. If you apply for a mortgage, they're looking at all of your statements for the past probably 12 months at least to determine your ability to qualify for a property. So, you know, is it that different than what the Bank of Canada has on their website? Like banks can do this right now. They can anytime just pull up and be like, hey, like, what's this deposit? What's that?
So when you're banking with, like, how much privacy are you entitled to with when it comes to your banking?
When you apply, if you are applying for anything, if you go and apply for a credit card, I feel like we're bullying TD or, not being nice to the TD right now.
And I actually love
Yeah, I
TD.
know. Yeah. Anyways,
Their customer service, by the way, is phenomenal.
all right.
Yeah, sorry. Go
Yeah.
ahead.
No, I'm just
Let's
kidding.
let's
So if you're applying for a credit card with TD, institutions are going to do their due diligence to ensure that you can, for a credit limit increase, let's say. So if you're of a $10,000 credit card, you want to increase it to 30 grand, they can do as much as they want. They can look at everything. You're going to get a credit check, which is, you consent to that. They're going to look at your banking. They're going to know exactly how much you have. I was on a call myself, just figuring out some corporate stuff with a lender. And as soon as I got off the phone with them, like, okay, you have X amount in your account right now. Where's the rest of the down payment going to come from? I was like, how do you know I have like this amount? It's just instant. Like they have access to all, and this is, anyways, it might sound simple, but it was not somebody who works at a bank um, directly at the branch level. So I was like, how do you know this stuff?
So wouldn't it be better then to decentralize your banking to some degree and say, hey, look, I'm going to bank, I'm going to have my car loan with this person. I'm going to have my mortgage with that person. I'm going to have, this and that with another person. And then when I go to apply for a mortgage, I'm going to negotiate based on how much information. I'm going to play my cards one at a time and not give up information that I don't need to.
Yeah, like what I would do 100% is like, obviously interest rate is important, but you want to get educated. I think everybody, when the education is so important. So if everyone knows your cards already, if the people you go to know all your
You
cards,
have no leverage.
no leverage at all. They're like, oh, you bank with us, everything's with us, your mortgage is probably going to be with us too. And the way certain people at certain lenders, pretty much every big bank, the way they get paid is the higher the interest rate, the more money that these people get paid. The lower interest rate, the less money the individual gets paid who does the mortgage for you. Whereas it's very different in the brokering world. Doesn't matter what your interest rate is, we get paid effectively the same. So why would somebody I'm not going to say their name anymore because we've been hitting them up too much, but why would anyone at a bank discount your rate if that means they're going to get paid less? And if they're like, man, this person's probably going to come with us anyways. If it's me, like I have a couple different banks, a couple credit cards at each different bank, and that's the way I work. Some people like to have everything in one for whatever reason, and yeah, I think we have the same viewpoint on that.
I think so. I mean, I'd prefer leverage when I'm negotiating for a major loan.
Anything, yeah, exactly. I'm with you.
Well, this was super enlightening. Thank you so much for taking the time to come in. I really appreciate it. And let's do this again soon. Keep people up to date, especially because we do have another interest rate announcement coming in about a month from now, because today's the 3rd. So yeah, about a month.
Awesome.
And yeah, we'll speak soon.
Always love to be here.